Yo, 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 yo. What's up, man? Damn, you guys are flushing in, man. What's up? Sticking to the fire. Moon Ape 21, Massive Zen. What is good, guys? Drop that name in the chat. What's good? What's up, Joe? Trauma Doll. What's up, man? Guys, we're going to go over it all today. AMC and all the goodies. All the other goodies. Pearson, what's up, man? All right. Coos. All right, so guys, if you follow me on X, if you don't, look me up. It's TWE Charts. I posted a little projection based on some things that are happening right now on AMC, right? So we're going to be looking at technicals. We're going to be looking at the cycle. And just really with the cycle, guys, what we're tracking right now is we're tracking the POI window that's coming up here in February. But with that and the cycle correlation, we're tracking a lot of stocks that are climbing up, that have a correlation of climbing up with AMI. We're looking back at 2021, early 2021, and tracking those specifically, the ones that have been suppressed to a similar extent that we've seen with AMC. Okay, that stuff is pretty relevant to track, right? And we do that here with the cycle. So let's get straight to it, man. Here is what I posted on Twitter. Okay. Here are the things we are tracking. We're going to start off with each one here. So we're going to leave the volatility window up. I'm going to take away some of these other things for now. So first thing we are tracking is this macro resistance trend line. Now, I got some comments on X, and we're like, yo, just $8? Like, that's it, man? No. So resistance is $8, right? Right around that $7.50 to $8 range is resistance, because that is macro resistance, guys. We're taking it from September 2023 down to November, and then that gives us this resistance trend line. So that's the first thing that AMC has to fully cross for the price to be bullish on the macro chart, because right now we're still trading at all-time lows. So, for the price to reverse back up, for us to see bullish momentum and a change in trajectory, we need to have AMC cross these trend lines, right? So that's just a first check. But if you take a look at the price change between the current range here and this, this volatility window target, which would be around $8, we're looking at about 100% move. And what's the rule, right? The rule is that inside the POI window that we experience every 62 days is just an opportunity from the correlation that we've seen before, right? Every single POI that has happened on AMC, the ones that do experience volatility, at least experience a 50 or a 70% change in price. And one way we track that is using this indicator right here, changes. Okay, so when you set the parameters down to, watch this. I'm using 10, but we're gonna do 15, because the 13-day window is a range between 11 and 15. We do plus or minus 2 days. So when we take a look at this, this is going to tell us within that range inside the volatility zone, right, how much AMC has rallied. All right. And this is why we have that 70% mark here, guys. And that doesn't change. But the 70% mark is telling us that in the POIs here, it at least goes up to that 70% mark, right? We have here are all the POIs. Okay, we have the one in March, okay, hit on the 62-day cycle inside the window. We have the one in August, okay, and then the one in June, the one in January, and the one in November. All of these, what they have in common is that they happen inside that 13-day window. All of them do. The only one in the cycle that did not happen inside was the most recent event in July, right? Even this drop, this inverse POI here, which we call the inverse POIs, and there's different correlation with that, but even this drop happens inside the POI. That's how I know, like, that's where we experience the volatility, right? This is the only event in the after-hour session that the algorithm said, let's pump it real quick and bring it back down into cycle, right? So these guys right here, for upside, we have a really good correlation. So now that that's coming up here in the next few, in the next few days, okay, the next few days we have this POI coming up here early February. What can we start looking at now, right? If the price is going to reach resistance, or at least come up close to resistance at $7.50 to $8 range, if it's going to fully cross through, okay, then we have, another level of resistance to track, which is going to be that $12 range. $11 to $12 range is going to be resistance, right? So anything after that, guys, and the price can go, parabolic after that if it wants to, but you got to look at technicals. You got to cross, these levels first for anything to, to happen after that. This is just being conservative in the sense that, you guys know how it works here. Like, we track AMC when we come very close to the POIs, because anything before that, it's unlikely we're going to experience anything that's fun on AMI. Unfortunately, there's not a good correlation with anything outside the POI window. There's not a good correlation at all. So that's why we don't track it, man. We don't track it because we wait, right? Patience. So this is the deal. We got resistance being that trend line. It's that hold that we have, that breakthrough, that threshold. Anything after that, again, we would get hopefully a breakthrough and a ripple effect. But now we got to look at some other indicators, right? We have levels here. Now the thing about levels, for those that know how this indicator works, is it's got these whole bands that are right here, right? We got 4 different versions and 4 different levels that we're tracking here, and it's really good at spotting oversold and overbought territory. Overbought territory we haven't seen on AMI, okay, on this range since June of 2021. All right, so it's been almost 3 years since we saw a major move on AMI. And yeah, we have not seen a full cross through. So you can only imagine, like, once we cross that, going into that oversold territory here, it's even projected that if all played out and this thing started to cross these levels, going into that bought territory would be somewhere in that $40 range. Now, that's probably going to take some time. I don't think that we would get that right away on this POI window. Like I said, $8 is 100%. If it's going to start climbing from there, then we get a ripple effect going upward towards that, which is going to be macro resistance as well. There's a lot of volume in this range here at the $40 level on AMI. So that is not something I would see as long as fundamentals hold and everything else holds, I don't see why we can't reach that sometime this year, right? We've seen a lot of stocks do that, guys. Last year, Carvana goes from $3 to 60, right? We had Upstart, we had AI, we have CGC, right? We have all these smaller cap stocks that were beat down the same way and basically went 10x in 1 year. So it's not something that, especially with a high volatility stock, we can't see happen again. But you got to pay attention to both sides, right? Because you just do, man. Like if this is going to be beat down to the opposite direction, I've already said this before, but we have the reverse split and AMC is trading at $4. And part of the reason why they're doing that too is, well, it's a psychological game, right? If they're going to take you down to that dollar range, the stock does not do well below that. If we don't get a quick bounce above, it does not do well below that. So again, guys, we got oversold territory here. Now, the thing that both of these have in common are these. I'm gonna call these the rounding bottoms because that is the technical name for this structure of a pattern. But what rounding double bottoms, don't show is this like this historical pattern that you're seeing right here, right before we enter that range, is normally what we pay attention to, the initial volatility zone coming in, and then creating what we call an inverse arc setup. Inverse arc setups is just the AMC arc backwards, right? It comes back down. Both of these are playing out inside the same oversold territory before going into that first level. So that's pretty bullish to me. The fact that we're trading sideways here in this range before entering the first level, we're building that inverse arc formation going into the POI window. That's another thing to track. That's pretty bullish to me. Okay. Apart from that, guys, once we do technicals, we start to track and look at patterns. All right. Patterns are crucial. All right. You know what we just did, bro? All right. You know what we just did, bro? We just track right now on the Discord. We're tracking about 3 stocks in the short term that are expected to have major volatility zones. And one of the ones that just played out today was Paramount. All right. And this is where I'm going to get into this whole cycle correlation thing. Okay. Because we're starting to get these checks. Right? You want to check things off. We had Ethereum Classic being the main reference pattern we tracked for an entire year, right? And it worked out well. It was crazy, man, how accurate that pattern was. All right, so that is the cycle correlation part, is tracking reference patterns, checking off that certain sectors have done in a sequence, have done a similar formation, and now this basically gets transferred over to other sectors. But in this case, Paramount is a stock that tends to track AMC, GME, all these guys. So you can see back here, if we take a look at the entire chart, Paramount was a massive pump and dump. Now, the only difference between this and AMC is, well, AMC had, phases where it pumped, traded sideways, it dumped, traded sideways, kind of kept doing that whole thing, right? When Paramount just was in a descending channel, okay, did not have accumulation. I don't even think this is going to have accumulation down here. I think this is just going to bust through. Now, the reason why I'm very bullish on Paramount, and I've been very bullish on this one since early this year, okay, is because of the structure of this pattern. As soon as you catch the structure, that is where you start tracking them, right? And this is why patterns are relevant. They're important to track. Right? So right now we're tracking like 10 different patterns on Paramount. But look, we're calling for upside this week. We're calling for a catalyst this week to happen on Paramount, and we just got that upside, right? We just got that upside today. Went up to $17, got shut down. We're expecting this thing to climb back up. Okay, after some rumors, and basically not rumors, but these guys had an offer made to them, 30 billion. So pretty crazy stuff with this. Now, this translates on over to AMC because, again, it climbs and goes up around the same time. Look at what happened in January of 2021. This thing starts to pump like crazy and then goes all the way up to $100 before being shut all the way back down in March 2021. All right, so there is a correlation with that. This thing started to pump like crazy early January. All right. Now, we also have, I think one of the first videos I posted on Amy this year was talking about this sector correlation with early January. And we have a good list of stocks that are climbing up. We had this guy right here just pumped recently here. Look at that. JAGX, this is a penny stock right now. But if you go back, and it doesn't matter if they're penny stocks, bro. Like this thing, I don't track these for like I don't care much about penny stocks or ones that have been shut down with reverse splits back to back, Xella, Mola, and stuff like that. But what I do track is when they went up in price, when the algorithms are pumping them. And same thing right here, bro. This thing starts pumping into January 2021. It's going up now. There are many stocks that are doing this. I think that we're getting finally some love coming into this small mid-cap sector in the markets. The meme basket, right? So, yeah, paying attention to that, guys, is crucial to this whole thing. And now you are going to get some stocks that are not going to do that. Like if the algorithm is meant to, it wants to track something else. If the algorithm is meant to keep these down for other reasons, then they're not going to be doing that, right? But the thing that you got to do with stocks, man, is you got to do your DD, man. You got to track everything and all possible outcomes based on the chart's formation right now. And what I see is I see a good opportunity for it to come back up to that 750 range. I think AMC has been suppressed for way too long now, that it has to have some kind of relief rally to the upside at least. And then from there, whatever happens after that, keep on check. But I think the opportunity right now, I think, is looking pretty good to me. All right, guys, as always, this is never financial advice. Just looking at stocks, man, through the lens of the cycle. All right, that is all this is. Now, let's do something else. All right, all in one daily chart. What are all those colors, man? What are all those colors? All right, AMC in red right here at the very bottom again. Guys, this is 100 stocks overlaid on top of each other. We have not seen, and these are the more popular stocks that you know in the markets here. 100, the more popular stocks that we know of. Okay, I just added another 40, so now there's 100, almost 150 in here. Now, whenever a stock is oversold to this extent, okay, I'm going to show you the last time we saw this happen. And we had a similar correlation before with this, but so the way this works, guys, is like, here's one set, right? This set right here in red has AMC, right? We take this out, we put another one now. This is CGC. This is one of the cannabis one. The correlation we had before, and we were tracking, the POI actually hit for this, but it did not go up the same way. But look at what happened the last time. CGC here went down negative 73%. It double bottomed, and then it had a squeeze. It goes all the way up almost 500%. Now, looking back at AMC, bro, AMC is just riding down below the threshold line. It hasn't even crossed through the threshold line. Okay? We got Mara up here doing its thing. Like, we got Nikola doing its thing. Carvana, AI, they're all doing their thing. While AMC is just trading below this range, has not even crossed the threshold line. So just think about how much suppression is happening below that. Looking at the overall markets, how much suppression is happening. Let's put AMC by itself. Let's take everything else out and just look at AMC by itself. All right, here's AMC by itself. Again, highly suppressed, way below the threshold line it should be at. You start to look at some of these other sections here, you could already see the POIs, right? Here we got POI, POI, POI. Like, guys, this thing is currently at negative 40%. The all-time low we saw for CGC was negative 73. This thing goes down to negative 82. We had never seen in its entirety this range before, not even in 2020. AMC reached an all-time bottom based on how quickly the price, it had an inverse squeeze, man, back in August, right? This thing goes all the way down, negative almost 90% in a matter of weeks. And that's equivalent to I believe it was 1,000, what was it, 1,000 something percent? So if somebody shorted this here, it went up to 8 very quickly in the after hour session, went up to, yep, right here, 1,000%, dude. Okay. From the bottom here, it's going to show 90%, but it's equivalent to 1,000% long. So inverse squeeze, man. And then now it's trading down. So what comes down must come up, man, unless the fundamentals are just crap, right? If they're crap, then no. What happened the last time AMC had an inverse, we're going to call it an inverse squeeze, but I'm just going to flip the chart here. Eventually it came down, right? It didn't sustain this range here for that long. So if we take this algorithm here from June up until November, we're going to get the same POIs here. The only difference is now it's flipped. So what happens, right? The price comes down, and then here in November, it starts climbing back up. All right. And we have been tracking this for a little while now. The only difference is the pattern here is it's not one-to-one. You can tell that the structure is similar, but it's not one-to-one, right? We got the inverse arc here, and the price starts to fall back down. It creates new lows. But then right here, guys, this is where the chart starts to flip. It starts to flip for good. And here is the POI that's coming up in February. It's coming up in February. We got the cycle here showing us that the sequence here has had enough of just trading in this range for a little while. Unless the fundamentals are crap and this thing is wanting to go down to $1, I don't see why this thing can't reverse back up. I just don't see why that can't happen, man. There's so much, so many things happening. Also, guys, the Ethereum Classic correlation right now, I posted this video, man, talking about the length between the two, but that right now, you know, it was projected that we would be tracking about 25 days behind. And that still holds, guys. The 25 days behind still holds because Ethereum Classic just had a volatility event take place on the 10th. And if you do the math, right here, the 5th is where we enter the volatility zone. If I pull up the cycle, that's another thing I didn't pull up on that Twitter post, that X post, but if we pull up the cycle, man, volatility zone here starts the 7th, and it goes up until the end of the month. Okay, and on that correlation that we had prior to the June run-up in January, we were tracking about 25 days behind Ethereum Classic. So if the cycle starts tracking again after this massive break, it checks out, man. It's in the POI. Okay, Ethereum Classic is going first. That's another reason to track this sector correlation thing, guys. Yeah, so pretty cool stuff. I know it's a lot to take in. I like when I go live, guys, and I cover this stuff, I try and cover the whole deal so that, you know, coming after and making a video that's a little bit more so I go more in depth on the live videos, and then I try and kind of cram up everything into one video after, so that you guys can kind of get all of it here. But it's looking, man, I'm pretty optimistic here in the next few weeks going into it. I know AMC has been, AMC has been beat down for a while now, and, you know, that's unfortunate. It really is. There's a lot of things I don't agree with the administration, and a lot of things that, that were warning signs, just in the reverse split in general, guys. But before this happened and the whole ape thing went down, there's a lot of speculation I had on AMC prior to that, because reverse splits are not bullish. They're just not bullish. So coming back down to that, and the way AMC fell down before, you know, this entire descending channel we're currently trading in, it's something that you just have to keep in the back of your, you know, in playing devil's advocate a little bit, right? You got to keep that in case the price does not go in you know, your favor. But that, you know, the market, guys, is not something that and I say this all the time too, but like, you got to see, there's going to be opportunities. There's going to be opportunities for stocks that you love. There's going to be opportunities for stocks that you don't love. Man, I love AMC. I know it's been beat down this way here, but it really is a patience game for it. It really is a patience game. So let's see. Let's track some other things here. Okay, another thing that I'm looking at. Okay, spots, guys. Spots is awesome. Gotta love spots. All right, spots indicator. All right. Let's see how long we've been trading. 735 days we've been trading in a pink, inside the pink curve here. Since the last pink spot here, this has been September 2022 on this fake out. Yo. 735 days from the pink curve start line right here. And then here's January 2021. I just saw this. This is like news to me. 735 here. Wait, 735. What the heck? And the POI is coming up, bro. See, bro. All right, see what I'm saying, though? Like, the POIs, guys, and I had a question about this. Like, somebody just said, you don't think we have a volatility end of January anymore? Looks like it shifted. So the volatility windows, guys, every year that happens, we have new option. Like, the option chain is the way that these volatility windows are made. These work. It's called the 62-day cycle. You are going to have stocks that go up in February. You're going to have stocks that go up in January. Normally, there's a month shift between sectors every single year, and they kind of go back and forth. It's different every single time. You don't normally get stocks going up, you know, on the year anniversary mark or like the 2-year anniversary mark. There's a slight shift with leaps and options expiring. So all that has to do with this, but this is kind of crazy, guys. So we have on this indicator right here from the curve, 735 days, it's literally the same here. Now I'm gonna say this. I'm gonna be pretty brutal with this. I am not calling for this at all. All I'm saying is there's a volatility window coming up. I talked about the levels of resistance. The price is way more suppressed down here than it was over here. And we also didn't have, any talks about a squeeze or anything happening. So times are different, guys. This is still really good news though, because it kind of showcases here a little bit how some of these indicators line up with the POIs that we're tracking. So I'm just curious. I want to take this entire thing here and kind of pull it up from the drop, but it does. So that's it's not the same pattern at all, obviously. Okay, from 35 here going up, but it is, and it does stay below that window for a little while. There's only one fake out here, blue to pink. We have one fake out over here, blue to pink. So it's like some of these patterns that are playing out here kind of happen in different sections of that sequence. Okay, and a sequence is just going to be anything that, like, I would call this being a sequence. The price starts coming down in the pink curve, and then it breaks out. That's where we get our blue spot. Okay, let's take a look at some other stocks, man, because now I'm curious what this means. Right now, my favorite stock that I'm tracking for AMC, if it has any, like the highest correlation, and I found this with the patterns, the highest correlation with AMC right now is NVAX. NVAX is like this thing is just massive pump and dump, series of pump and dumps on NVAX, but it has the highest correlation with AMC because of the most recent drop. Okay, so if we take a look at where is it? 735 days from a pink. I'm just going to do this. It's going to change probably throughout. $735, dude, that's crazy. Okay, so let me pull this back up here. Post that later. Here's NVAX. And you guys can already see this pattern down here is bro, why is it always the high and low bars? They like make the chart here just not function. Okay, here is what is a redistribution phase down here for a little while. This part of the algorithm, I think, is sped up on AMC's chart. You can see it right here. Okay, it's flat on NVAX, and then it falls down, goes into this accumulation phase, which is pretty clear, macro accumulation, and then it starts to reverse back up. So we can see that happening right here on NVAX down here. Okay. Now, this takes from the moment it drops. So I'm talking. This is August here. From the moment it drops, it takes 322 days which here, you can see right here, for it to finally start coming back up. But prior to that, you can see right here, it only takes 168 days. Look at that. We haven't even hit the 168 days to experience volatility right here. 168, volatility. Oh my God, bro. And I have that pattern right here too. It's right here. It's this one. Here, from the drop. I'm going to do from the drop. High and low bars. Checks out. Boom. Let's see, is it $8? Yep. Bro. NVAX, guys. Right here in the same sequence. Falling down from this drop. 168 days exactly. I'm on the weekly chart. And if you go on the daily, what did we just talk about? We just talked about resistance, the POI window resistance coming up to $8. I mean, it happened on NVAX, dude. Like, here. Let's see, February 22nd to August 22nd. I want to do this exactly the same. February to August, whichever way it works. 3-hour chart. Perfect. August to February 22nd. $168 days. So this should match the other pattern. So there, over here, it seems like there's some data that is not. So I measured it over here. There's some gaps within the chart. That's why it's not lining up perfectly. So I need to line it up like this. And that should work. February 15. There we go. Look at that. That's crazy, dude. That's absolutely crazy. But so a few other patterns already that so if we were looking at NVAX right here back in the day, right? I would have done the same thing if I was tracking this. The first thing I would have done is, well, resistance, right? In this case, resistance is, so if we take it from with NVAX here, we're actually crossing resistance. And what this is doing is it's having a volatility event based on the cross here. So it tested it 1, 2, 3, 4, 5, or 4 times. And on that break, it has a pretty nice rally. So with AMC, it's slightly different because we don't have a test yet. We're anticipating a test. But the good thing, though, is that if we track the levels based on the high and the low, this thing goes up to the $8 range. It goes up to the $8 range. We're tracking the high here and the low area. This thing goes up to $8. So that's a pretty good sign. Coming from that, we're looking at the same days too, I believe. NVAX, yeah, 168 days on that for NVAX as well. That's absolutely crazy, man. Okay. So that's exciting. That's exciting. A lot more correlation. Look at that. A lot more correlation is happening. So now, guys, I've pulled up, man, and this is the thing. I go live. I talk about some of these things. They just kind of pop up, and I start seeing more correlation. But AMC has had over the ever since we dropped here in August, we had the inverse squeeze. It's had, I believe, 2 POIs. Let's see, 1, 2, yeah, 1, 2. So here's one POI, right? Inverse POI, 1,000%, right? And then we have this guy right here, another small POI ends up coming down. Okay, and then here we don't have a POI. So on this third POI in the sequence here, like with the NVAX pattern, with Ethereum Classic, with everything I just pulled, there's like 6 or 7 things I pulled up that are all bullish. They're all bullish, and it even like I'm bullish, right? But like in the sense that at least volatility would be a factor regardless. I even think is likely. So you guys know how it works, man. We track these volatility zones in hopes that the price goes up, but anything could happen, right? The price can start coming down as well. That's going to be the main thing to watch out for here is a catalyst. Like I said, guys, with Paramount, we just did this, okay? And just this week on the stream, okay, I basically talked about the catalyst coming out in the next few days because of what these patterns were calling for. And a lot of these patterns, okay, we weren't just looking at the structure here from November, right? This projector pattern that we have developing. We were looking at the historical patterns as well. And it's pretty clear to me that a lot of these patterns that were doing this were calling for a spring projector and then a continuation. Okay, we have Roku, right? We had Upstart here. Look at that, Upstart to a T, right? Does not come up to the same levels, but it hit the POI, the volatility zone hit. Okay, we had NVIDIA, okay, IBRX, okay, we have Moderna, like all of these guys. Look at that historical pattern right here. We're all calling for upside. So I treat AMC the same way, man. We started doing this because of AMC in the first place. And it's just to show that, those people that say patterns don't work, I just don't understand that logic because, bro, if patterns didn't work, then why are people tracking flags? Why are people tracking cups? Why are people tracking double bottoms? It's better when you have a reference pattern that, that is one-to-one, because then it makes it more likely that the algorithm is following that part of that sequence. Like, that's why we track these patterns, man. Okay, so I'll give you guys another example of this. We are just tracking Save, dude. If you guys remember the stream on Save, all right, pretty much gave you guys a correlation to track here. But this right here, man, this pattern was absolutely crazy how accurate it played out. Okay, in time, you go back over here. I'm putting it side to side. This right here is Upstart, right? And on the all-in-one indicator, this is what it found. It found a stock that had gone down the same way in May of 2022. What happened, right? Gets the same high, goes back to the same low, has the same structure, dude. It falls down, goes back up to the same exact level, which is 930, and then back down to the same mid-range right here at 16. All of this has played out to a T, right? So we have like a wedge formation, basically. This is rising wedge formation. Now this is calling for 930 again, or a breakthrough, maybe even 10 in the next few weeks. And this is a reference pattern. That's a reference pattern right there. You can see the time is not one-to-one, but the structure of this pattern is is very similar. It looks very similar. So yeah, man, I love this approach, man. I love the cycle approach because it makes you find certain things, dude, that you normally would not see in, just with stocks and in general. Like it's a really nice little approach. But yeah, man, save. I'm bullish just based on this. The fact that it's tracking this specific pattern. With especially with stocks that experience volatility like this, I'm more inclined to track things based off of a reference pattern than use indicators on these, right? The ones that experience heavy volatility, because I have a good reference pattern I'm tracking. Happened in the past already. The algorithm wanted to repeat this pattern here, and yeah, options, man, has to do with options at the end of the day. A lot of options in this market here. Save. Yeah, I mean, I'm with you, man. I do believe the markets are. I think the markets are planned. I think there's a very small percentage that makes or breaks, algorithms. I think it has to be a lot of volume. But yeah, man, the top three, BlackRock, Vanguard, these guys, they have the majority stake in basically all the indices, which have all these stocks, man. So you gotta think about that. Those guys are the ones creating the puppet show, right? The puppet show it is. I mean, a lot, bro. There's just been too much that has happened over the last couple of years to where I could be like, yeah, it's just a coincidence, right? That everything is lining up on the POIs, that this pattern is tracking to a T. Like, I mean, if it was 1, 2, maybe even 3 times, then I would say okay. But that's just not the case, man. That's just not the case. It's been way too many times that we have seen that happen. And I'm not going to stop, bro. I'm not going to stop anytime soon. I'll tell you that. Unless they change the structure of the stock market, which I doubt. If there's like new regulations or something like, oh, you guys can't use bar patterns anymore, then I don't know. I guess, or if they change the way options are traded, or because they have certain regulations in other countries that would probably make it a little bit hard for some of these things to occur, but not here, man. Not here. Okay, let's see what else we got in store, man. Hey, you guys are welcome to drop questions too if you would like. I did cover AMC quite a bit. So if you want to, I'm gonna kind of go back and forth. But if you go back into like the middle of the the middle of the video at around the 25-minute mark, it'll cover some really key things, some important things going into the POI. All right, let's see. See what else we got here in the markets, dude. All right, so DWAC. Let's do some analysis here on DWAC. Who calls it DWAC or DWAC? I don't know, man. Yeah, so I mean, all of this is going to be driven, guys. This is going to be a roller coaster of moves. It really is. I think that it's honestly with this kind of a play, One of the things I compared this to, and guys, the levels like were very close and hit almost perfectly when looking at the AMC pattern here. Like, look at that, bro. This thing got shut down, came down to this basically the same range AMC did, and now it's kind of riding up to that $40 range. But there were many patterns we tracked that were all calling for the 55 to 60 range and then shut down back to 30. So the sequence is currently playing out, is looking good. I think that we're going to get another type of like this is going to be driven by catalysts just back to back, and until the elections come up, I think this is just going to be riding back and forth. It could get shut down to 20, then trade sideways, then come back up. So this one's going to be fun this year. I will say a lot of volatility is expected on this one, but coming from like the fact that it just reached the $60 range, until the next catalyst, which I think is probably going to take a little bit of time, this might be a choppy ride. Like this can come back up, can get shut down, right? And then we have a few patterns here that I think meme is one of the ones that is tracking. It's like the most accurate one, but I do agree with this one. I think that we're seeing a lot of stocks and cryptocurrencies right now are making this what seems to be a cup and handle, but actually it's pretty unique in the way this pattern plays out. It's got like that little, yeah, it's like more of a double bottom followed by two major volatility events. So double bottom, maybe a little head and shoulders pattern, something like that. Comes back up, gets shut down, and then continues its rally. But guys, I think for this one, similar to AMC in 2021, okay, this had a POI in January. So I'm personally just like looking at options. I'm going to treat it the same way and probably expect something to happen in June, because options you can't manipulate, man, like in time. So that's the beauty of them. And why the cycle works is because when we're looking at time, expiration dates are pretty much set, and you rarely have anything that is that shifts much in time with as the years go by. Like we're talking a week behind, a week, once the POI hits, which this one happened in January, okay, it's likely that if it gets shut down the same way and starts following the AMC sequence, that we would get something else happening in June. So for that, I'm not looking to do anything with DWAC right now, because it just got shut down, man. Almost 50%. Do I agree with the correlation with IWM? I did not talk about that, man. Let's pull that up. So the correlation with IWM and it just being that that's the indice that basically tracks all of these stocks, right? That's why I use it for the changes indicator. I use IWM to track everything. I want to see what the overall markets are doing, because whenever the markets and this is a good way to see this too, guys, but you can see here like when the markets peak, that's normally where you get AMC peaking, right? That's where it goes up. So that's kind of cool that we can see that here, because it's a good way to also track and note where like if the stock has potential to go up and it has a correlation of climbing up and peaking when the markets peak, we're going to see that too on the IWM chart. And in this case, we're not there yet. So it looks to me like the markets are going to start climbing back up too, going into that POI in February. And if it peaks in February, we just get a breather, right? We want to see a breather, because following the almost 3 years of declining here, if the stock is going to turn around, well, now we're going to see higher lows, we're going to see higher highs, and that's just it's going to be very different from what we're used to seeing on AMC, because we're used to seeing it be shut down on the peak. So this is it shouldn't pump and dump. It should go up get shut down on the peak, but only get shut down to where it comes and retests, support. So it would be something like this, right? It climbs up on the peak, and then it reaches and establishes support, and it starts to climb back up. It looks healthy on the way up. You know what I mean? And this is, guys, this is not NVEX we're looking at. This is AMC right here. It's the changes indicator on AMC. Okay, I play around with the bars to compare a little bit. We can do 250, and it'll show us a better, or like not a better, but like a different version of kind of what's happening here. But yeah, IWM right now. So it's not like where the markets are. It hasn't reached its high yet. So that's why I think that a lot of these mid and small cap stocks are going to go this year, because it's been the only, last year we had the blue chip sector go up, and we had a small percentage of stocks go up like Carvana, AI, but even these guys did not go up to the all-time highs. They got shut down and only came up to like a fraction of how much they were shorted. So those guys are probably in reaccumulation. I mean, I've said this already with Carvana, but Carvana I think is in reaccumulation. I think it's going to keep going up. And I'm like really bullish on Carvana, bro. I think Carvana is going to go up to like somewhere in this range here, dude. Like I look at this. 375 goes down to $3 and then up to 60. This is what I'm talking about. In phases in the market. This took an entire year, and if this is going to change, look at what it's doing. It's creating higher lows. So I know we're used to seeing the markets come down. I mean, it's been almost 4 years, guys. We're used to seeing the markets come down, but when they're going to come back up, you're going to see the complete opposite. You're going to see them trade in this trajectory for a little while, and if they're going to turn around, they're going to start hitting these lows. They're going to start hitting this trajectory line on the way up. We're going to see new highs, and things are going to look healthy. They're going to look good. Yeah, that's the same thing for Amy, right? But for Amy, the difference here is that this is in reaccumulation. I think AMC is right here. I think AMC or AMC could be right here too. It could be entering a accumulation phase that might last a little bit longer, or it could be exiting it. And if it's exiting it, you're going to get an advancing stage. And advancing stages are where we just see it pump after pump after pump, and it lasts about a few months. Yeah, a few months of just pumping. So hopefully that's the case, man. I mean, I want to see AMC just spring and, climb up, but you got to pay attention to the phase it's in. Things are... Anyways, back to the correlation here between the two. Okay, on the 250, AMC is still declining here, while IWM is just stagnant. It's not really doing much. It's pretty stagnant, but it looks ready to break out here. So on this breakout, once we start climbing back up into the highs here, I think AMC will be in another, hopefully it's broken out of the trend line here and it starts to reverse back up. And let me see here, because also IWM is showing similarities between right here, June 2022. Get that right here. We get the spring, and it starts to just climb back up until it reaches its highs. Remember, a lot of blue chips already did this, man. So right here, we have a similar formation. It would be a spring, and then a continuation into the end of the year. And yeah, man, let's see. Go EV. Yeah, Go EV. Canoe. It's another EV sector. EV sector, guys. I'm very bullish on the EV sector right now. I think the only blue chip stock that I'm bullish on is Tesla, because it's while AMD and Nvidia, Microsoft, Apple, they're all up here. Look, I'll show you guys real quick. I'll pull up the EV. This is the EV all-in-one. So these are all up here. You can't really see them because got you guys in the chat here, but AMD is in blue. Green is Nvidia, and then red, which you can't see all the way on top, is Tesla. And it's right now, it's the lowest one. Look at it. Here's the blue chips, man, and SPY and QQQ. These are the highest cap stocks in the market, basically the more popular high cap stocks, and Tesla is at the bottom. So it's a little correlation, right? But what happened the last time Tesla was at the bottom while everything else was up? Boom. Right there. So I mean, unless Tesla is a garbage stock, that I don't see why it, I mean, once it gets beat like this, it normally has a good turnaround, man. See right here, or it has a nice push, right? Everything else might be pretty, because Tesla is like, it has more volatility than most blue chips, man. So it's expected that they would do something like this, kind of liquidate positions and then set it up to rally. But the only other time, I mean, we've seen it climb here. Here it's oversold. It takes a little bit of a little bit of time, but from May to November, oversold the entire market, and then it starts to go back up again. So at some point it does lead the markets, and I've already got the projection on that. But if that goes up, we're going to start to see everything else go up, like GoEV, Nikola, Lucid, Rivian, even Carvana, like these guys setting up the EV auto sector pumping. I don't see why not, man. See why not. Yeah, and Rumble too, man. I know that Rumble is now kind of running together with DWAC. So it's after the catalyst. But yeah, I'm treating it the same way, man. Like, really, the two are gonna probably track in a similar fashion now. Same with fun. Like these three are probably gonna be in the same little sector, and it doesn't really, it doesn't really surprise me either. Like, you can see back here, this runs in December 2021, and right before that, here we have DWAC going up in October. So they're about it looked like maybe like a month behind. And so very close together. Like, these two are tracking for sure. But yeah, I when stocks are like this, man, and they keep pushing, like, sure, they can continue. But like, I mean, at this point, it's just like they're way oversold, right? And I wouldn't be as bullish comparing the two. I'm more bullish on DWAC, like, in the longer term, right? I want to see it maybe come down a little bit, and then I'm a little bit more optimistic that would go up versus Rumble. Let's see. I'm gonna look at the intraday chart here, see if there's any breakouts. Let's put back all these. Yeah, I know we had FOMC as well. Markets are dumping a little bit. Happy. It looks like LAR. Oh wait, is this AI? Oh, it's Upstart. Upstart is dumping here. Upstart. Let's see. Well, it's dumping the most. Yeah, had a pump, a pretty massive pump, man, up to 35 and then shut down to 32 and going. Upstart. Yeah, and Upstart, guys, same with Upstart and Carvana because they did have their nice little pumps here. Even though I'm bullish on the macro chart, in the short term, this doesn't change, anything, right? With FOMC right now going down, I wouldn't be surprised if Upstart just kind of trades within this $32 range. Even if it came down, man, to 30, wouldn't be surprised, man, like if it just does something like this. Right? Double bottoms and then starts climbing back up. Let's see what's holding. A VXRT is one of the ones that is like pretty much up today. Yeah, VXRT is up 30%. 5 minute. Oh, wait. I'm on 250 here. Hold up. There we go. Okay. LLY. CGN and go to or got you. Yeah, with Paramount going up, would not be surprised if we start to see these guys pump too, man. The Chinese sector, if you look at when these dumped, they dumped around the same time. It was when that whole like Evergrande thing was happening in 2021. See, March, everything dumps here like crazy. Paramount was dumping. So yeah, I would not be surprised, dude, if we go to EDU. Another pretty good one. Pretty bullish on EDU. EDU, man, I think is going to go. EDU dumped in March as well, and then into June and July. TME. I mean, pretty much all of the, around the same time, you see any of the ones that were dumping hard in March, I think there's a lot of correlation with Paramount there. So that sector should have some kind of a rally here. Now that the markets here are expected to maybe take a little breather to the downside before it starts turning around in preparation for February, guys. Because what's happening here is finally after the month is done, we broke the high, right? We broke the market high, finally. I think all this is doing is coming down to retest. And then once it does that, back up, baby. It's a small breather. I don't think this is the peak. I don't even think it's close, dude. We haven't reached 500 yet. 500 is a psychological level. So once you cross a psychological level, you push a little bit more, man. You push a little bit more, just enough to fake out some peeps. Because I know that there's probably a lot of shorts at 500. And you want to squeeze, I think what they want to do is squeeze them out. Squeeze out the shorts. So, yeah, and the pattern outlook for SPY has also been pretty accurate, guys. The spring we called for here, we've been using multiple patterns, actually. I'll show you guys the ones that were pretty accurate here. But this one here, I think is the most accurate one right now. This is 1-to-1, and this happened, I believe, in 2016. And then this one, also calling for downside up until 474. And then there's this one too, right here. And this one was, for some reason, stretched out. Okay, so all these really calling for that 474 range before the markets turn back around. It's going to be interesting, though, seeing the markets, though. If this does double bottom, or not double bottom, if it comes down to 474 quickly and bounces on this blue curve, kind of like this, I would expect a spring setup the same way. So it bounces at 474, get a spring setup back and ready for February. Because once February happens, guys, I am no longer bullish in the markets and I'm not talking about the small mid cap stocks. Those they're like, if the markets are choppy here on the way down, I think the ones that are gonna beat, like gonna take a major beat, are the blue chips, with the exception of Tesla, while Tesla's going up. And the mid cap and small cap stocks would probably have, pretty nice rallies, come down, rally again and again and again until the markets are good to climb down. And I think the first half of the year is going to be bullish on the market. Second half of the year is going to be pretty mediocre, maybe just choppy or retest back down at some mid-range down here, maybe 450 or something like that. But you guys know how it is, man. I don't like to get too ahead of myself with that stuff. So let the markets play out, do their thing, and update as things start checking out. Awesome, guys. Well, now that I went over this information here, I'm going to try and narrow it down to some of the key things I talked about with Amy. So expect a video coming out in the short term on that. BOI coming out, guys. Awesome. Thank you guys for joining in, and I'll see you on the next stream. All right.